I know this is not the most sexy topic on tax and enterprise accounting for NFT projects, but it's incredibly important. It's incredibly important. So what we're going to talk about today is how to set up your NFT launch or your NFT company or platform for financial success. And we've seen a lot of projects come up through the process, launch great art collections, and normally they come to us a month or two after they mint out or after they launch, and they're like, Eric, what do? We have this revenue that's come in, and how do we operate our business? How do we pay our tax? How do we even disseminate what's happening on Etherscan and put it in a way that we could actually do some accounting with? So I just want to kind of reiterate, accounting and tax is not a sexy topic at all, but it's incredibly crucial. As we all know, if you want to sell your company, bring on investors, you need to have clean financials. As a company, we recently helped Oniforce, which is one of the most popular projects 2 years ago. We helped them get acquired a couple months ago. We also do advisory work for Steve Aoki, the Chainsmokers, a lot of projects out there like Capsule House. We've done a lot of this advisory work for them. And the one thing that I always reiterate with everybody is great accounting and tax support should be seen as an investment in the business, right? As you want to grow your enterprise. So the first question people always ask me when they come to us is like, where should we set up our business? There's a great panel earlier about international concerns, offshore things. I'm a US tax expert as a IRS enrolled agent, and the one thing that we focus on is US taxpayers. So what type of business entity is really important? Is your business going to be a lifestyle income? Maybe you're an artist that's dropping one of ones, right? That's a very different consideration than something like a Yuga Labs, which is dropping a 10,000 piece collection, looking to take on venture seed money, all these different things. So where you set up your business matters, and how you set up your entity also matters, right? There's certain states now that we're starting to find out that are sales taxing NFT drops. Washington State is one of them. Right? So are you planning to establish your business in Washington State? Is that where you have Nexus in? There are additional costs that you need to consider. Now you might need to start doxing your holders to determine what sales tax you need to collect from them from selling them an NFT. There's a lot of complexity here that needs to be thought of proactively prior to launching your company. Now, with corporate structure and creative IRS provisions, you too can avoid a bunch of income tax, right? The biggest challenge that we have right now is there's been a lot of projects that minted out last year or the year prior, and then they come to us March 15th or April 15th saying, oh my God, how do I pay my tax on this? And we come to find out that they didn't have any formalized entity, so they're technically a partnership, right? A couple of founders. And one of the founders is an international citizen, which now subjects them to backup withholdings in the United States plus income tax in their foreign country, where we got to look back and say, okay, is there something that we can possibly do with this entity, this business, to help them minimize this tax, right? There are different ways to set up your company properly to minimize or at least reduce the tax as much as possible to allow your company to operate as streamlined as possible and have more money in your treasury to expand, grow, hire, whatever you need to do. And folks always ask me, like out in the hall, Eric, what is the best structure? The answer is always, it depends. The IRS code is just gigantic tome of text, like thousands of pages in terms of like the IRS tax code. Everyone's situation is different. Where are your partners located if you're running a partnership, right? Where are you planning to establish your business? All these things factor into how you establish your company. This is another thing that I keep hearing all the time, and it's been years, right, since NFTs have been launched. This is one of the biggest misconceptions. Every crypto transaction that occurs, regardless if you exchange for fiat or not, or if you withdraw to your corporate Coinbase, triggers a taxable event. Each transaction houses multiple pieces to it that need to be tracked, right? When you receive the Ethereum from minting out a project, that's active revenue. Now you hold that Ethereum in your wallet, and you eventually transfer that wallet into USDC to pay for your expenses operating a business. There's potentially capital gain or capital loss. One of the biggest problems a lot of NFT projects have right now is when they minted out, let's say last year, ETH was at $3,000. Right? Where is it right now? $2,100. If you kept your treasury in ETH, and we've seen this happen a lot with a lot of different projects, you're paying an income tax on income at a $3,000 marker, but you only have ETH now at $2,100. There's a huge disparity there. So a lot of projects are like, well, if I have a devaluation of ETH, can I write that off? So in accounting speak, in accounting nerd speak, we call that impairment loss. Right? Your value of your treasury has been impaired by the devaluation of Ethereum. Unfortunately, presently, until FASB, which is the Financial Accounting Standards Board, really start coming together on their digital asset side of things, the impairment value can't be deducted as an expense to your business. So we've had clients that came to us, minted out last year, made $2 million in their corporate tax rate. Right now, they owe, let's say, $400,000 in tax. But in ETH, all they have left in their treasury is $200,000. And you're like, Eric, can I deduct this loss of ETH against that so I can minimize my tax? And it's two very distinctly different sources of income. Active income, capital gain, capital loss, and one does not offset the other, right? So these are concerns that a lot of companies are starting to find out now. And it's creating a real conversation on the importance of what we call corporate governance. When you receive ETH, do you exchange it immediately for USDC? Because many of us as entrepreneurs and business owners, we are not traders. We are not here to speculate on the value of ETH. We are here to operate our businesses, hire employees, launch projects, work with our communities, right? So there needs to be some corporate governance in place that says, hey, if we receive ETH from OpenSea from royalties, if we receive ETH from minting this next project out, immediately within 24 hours, we exchange to USDC. We recognize the gain at that point, but now we have a stable coin treasury that we could run our business on, right? Because we don't know where ETH is going to be. I'm a ETH maxi. I've been in the space since 2017. I got way too many JPEGs, probably like 1,000 NFTs. Like, I've collected a ton of stuff. And like many of us, bag holders in a ton of projects. But as a business owner, we can't allow our businesses to be operating based off of speculation, right? Your wallet infrastructure is extremely important if you're running this as a business. And what is wallet infrastructure? Wallet infrastructure is how you set up your wallets to determine what are the sources of income and to determine how are you going to pay for your expenses to operate your business. So here's a sample map that I did a couple years ago for a couple of clients. Let's say, for example, you are a NFT project. You would mint it out, you'd collect your ETH in one wallet, then you'd have royalties designated to another wallet. This helps you organize and sort your income very easily. You'd have a separate wallet that is in operations. That's where your expenses come out of. And then you want to have a corporate account that you could off-ramp your fiat into. It needs to be associated with your employer ID number because you don't want Coinbase down the road to send you a 1099-K to your personal social security number saying you owe capital gain tax when it should be corporate because that becomes a mess, right? And then you have a corporate fiat bank account. Mercury Brex is a great one. If you have merch, physical product revenue that comes in, and then you can also set up your token launch through the structure as well. So how do you do financial reporting for this madness? I know we got like a minute or two left. We use tools to translate the crypto side of things, Gilded.finance, Bitwave, Integral to XYZ. We use that to sort the data and push it into QuickBooks, which many of us are already familiar with. And then we use traditional financial tools to do payroll, fundraising, and your loans. If you have any questions, want a copy of this presentation, just hit me up, NFT.NYC at thecashflowdoctor.com. Again, we do advisory work for some of the biggest NFT projects. We've helped a couple of them get sold, raise venture capital money. So we've seen all of these challenges, and I think we've figured out a lot of these problems. So thank you so much for your time.